Hi, today is Sunday the 17th and this is the SPX outlook for the coming week. It's not going to be very easy to read the market. As you can see, from Wednesday to Friday the market went on a giant bull run from 43.25, basically 150 points in 2 days, and it could actually even go higher. If we look here on this 4-hour chart, the higher resistance is around here, 45.30. There may be here, this is a stall level around 44.90, 44.95, and of course market reversed here on this level, so maybe we'll have just a little bit of follow through and maybe it will stall. We see that yes, there could be some form of an upward channel here. The downward channel here has definitely been broken and the market actually didn't even look back. It went straight up and probably coming from the first financials, JP Morgan, Goldman Sachs posting outstanding results. So, is it rosy bullish? Difficult to say. The NASDAQ also went on a very strong run. The support resistance lines are also going up and maybe going for 15,300. And here we see that the downward channel has been broken. So, difficult to be bearish or contrarian in this market. We saw that there was a little bit of decorrelation. The NASDAQ took a stall on these levels around just above 15,000, but it looks like the bullish pressure is still quite present. Now, if we look at the VIX, we see that the VIX has gone down and it's now down to the support near 16, and it could go even lower. So it looks like there's not much concern, and market participants are happily waiting for earnings they expect to be good. Probably something that is not so bullish is pressure now or tension on yields. This is the TNX, the 10-year Treasury, and even though there was some respite here, the 10-year yield going down to 1508, in other words, going below the strong resistance, now it's actually charging ahead and trying to break it again. So this generally, if there's a bond sell-off, it should eventually have an impact on stocks. But that being said, at this time it's more reallocating, shifting, probably moving away from bonds in a reallocation towards quote-unquote more risky assets. Let's go back to SPX. So we see here there was a pattern fib expansion and the market has hit this one. So this is also a good reason. Also looking at this reversal here, it could be a good reason for the market to pause here, but I would say the market's going to try and go higher. If we now look at the daily chart, also here a very massive recovery, and 43.75 was a level I had been watching on the 4-hour and the 1-hour chart very closely, and it looks like now the market is in any case looking to stay above this pivot level. This is not a very clear pattern, that's obvious. The market has been quite agitated and it may be still erratic in the coming weeks. We have a few more financials. We've got Netflix later in the week, and towards the end of the month we'll have the large stakes in early November. Also at the same time, early November, we'll have the FOMC. I believe when we looked at the FOMC minutes, which also made the market rally, because it really looks like the Fed is going to be very dovish and is going to be tapering very slowly. They're talking about reducing the money creation by $15 to $20 billion a month, which is really not that much. So they are very soft in turning off the tap of liquidity. And the market is obviously more looking at when rates will go higher, and we may have more clarity or visibility next time in a few weeks. So for the next few weeks, it's going to be all about earnings, and then FOMC will be center stage in people's expectations. So now for tomorrow Monday, here we see that the market is passing 44.55 resistance. It stalled there for a while, but the market just couldn't retrace. There was no profit taking. If you look, really, it was almost like a straight line all the way up, which is of course a little bit unnerving. But at this point, if we had at least some profit taking, it could actually be just to test this level for support. If we look at a possible fib pattern here, the bullish resilience level is on 44.40, so there would be maybe some test of this area, but I don't see the market really going to a lower fib, and 43.75 is now history, at least for now. The market, as I said, can be quite volatile. Okay, I'm sorry I couldn't be more definite about my outlook. This is not a very easy market. It's definitely not a market for contrarian. It's better to go with the flow and adjust accordingly. So there will be an update tomorrow morning when the futures reopen later today, Sunday. And I will also record a weekly recap on the options trades later tomorrow. As usual, join the Rhino Slack if you're not there already. There are updates twice a day, and that's actually, even though this SPX outlook is not very crisp, it will become easier as we go along with updates twice a day. Thank you for watching, and bye for now.